Okay, good morning, everybody, and welcome to the morning meeting of our virtual hedge fund. We call this the ARMR Investing Way. We're going to talk about how to identify possible 10x investments. We're going to look at Palantir, SanDisk, and NVIDIA. What do all three have in common before they exploded? We're going to go over the top three fundamentals that have to be part of the story before I put money to work. These are the top three. There's all kinds of things fundamentally. People will tell you you have to research and figure out. I'm going to give you the top three, maybe the only three I care about that lead to investments that can 10x in our portfolio. So we're going to get to that in a minute. We call that the ARMR Investing Way. We're going to talk about our risk monitor and how it may change by the end of the week. There is something very interesting brewing with the flow of capital into one particular index. And then when I go through the ARMR Whiteboard, I realize we have a lot of those names popping up on our whiteboard at the very top shelf of the whiteboard. So if we put capital to work, these will be the top stocks to watch, top stocks to buy over the next couple of days as we're putting capital to work. So we're going to go over all of that. Let me remind you a couple of things. Number one, comments, questions, throw them in the comment section. I'll try to get to that before the end of this discussion. Number two, Substack, subscribe. It's free. It's where we drop our research reports. ARMR Investing, substack.com. Number three, I call this a virtual hedge fund. We are managing capital personally, professionally. I share with you different portfolios. ARMR carry trading, that's how we day trade. We had a good day yesterday. We've tweaked it a little bit. I'm going to share with you what those entry points are. We're going to do it again today. ARMR Macro, that's the portfolio where all we do is trade indexes, okay? And we're very close to putting some of that capital to work. Then we have our ARMR Invest portfolio. That's where we have our individual stock investments that we think can 10x. And we put it all together in our flagship fund, how to use all these pieces to build a portfolio. So I'll share with you what I'm doing there. But I've added two new portfolios to our portfolio page. So ARMR Insiders, you can go to our website. By the end of the week, you'll see both of these portfolios. One, ARMR Insider Top Shelf Ideas. You guys on the desk are coming up with huge ideas. And I want to make sure that information is reflected for all of us in the ARMR universe to see it. So I'm starting to carry that for you. Entry points and stops and targets will be managed by the ARMR Investing Way, but the investment idea comes from you guys. I appreciate the flow of information. Keep it coming. It's great. And I'm going to elevate positions that fit the ARMR Investing Way from an entry point and from a stop discipline, okay? And then the last thing I'm going to do, by the end of this week, Friday at 3:30, I am going to begin building again the ARMR Dividend portfolio. Now, we've done this before together. A couple of years ago, we really focused on this. We got long the tobacco stocks, the telecom stocks, and we had huge runs collecting fat dividends with major appreciation in our capital. We're talking about 50 to 100% moves in these stocks, AT&T, Verizon, Altria, British Tobacco. And at the same time, we were collecting yields of better than 8%. So we're going to do it again. I don't see yields of 8% right now, but I do see something building, and I'm going to dedicate capital to this dividend portfolio, and I'll share it with you on Friday, okay? So let's dive in. Don't forget, when I say virtual hedge fund, I'm asking you to come to this desk. All of you who are listening, come to this desk thinking like a portfolio manager, thinking about how you want to manage your risk. And whatever I say, you got to make your own decisions. Risk tolerance, goals, all that kind of stuff, and execute your strategy. Only you can be the smart money of your own assets. All right. So How do we break all this down? First, let's get to the big picture of IBM, which will be second. That's what we'll talk about second. First, we're going to talk about risk monitor. It's red right now. It might turn to yellow or green by the end of the week if we keep getting follow through in the market. So we come down, test the 50-day moving averages on the big indexes, S&P, NASDAQ 100, and the Dow. Some of the leadership really got hammered last week. Momentum, IBD 50, but they're trying to find their footing. And then the equally weighted S&P, which was really a sore point and looked like a major breakdown. Instead, it was a double bottom. It's trading back above all the key moving averages. So what this tells us is if we get followed through by the end of the week and the risk monitor changes color to yellow or green, we can put some more money to work. So where are we going to put the money to work? First, we're going to be using our carry trading portfolio, which we did yesterday. This is the 1 minute chart above the 3-minute chart of the S&P. The green boxes are where we get long the market for a carry trade during the day. We carry treasury bills in the portfolio every day. That's all we hold overnight. And then we get long triple the S&P or options. Some of you buy options based on our trading strategy here. When the 1 minute chart, which is these green boxes up here, line up with the 3-minute chart, that's when we get long. The low of the bar we're buying on the 3-minute is the stop. So the stop is tight. And then we ride it as long as we can. We rode it all the way to the close yesterday and booked our profit right near the highs of the day on that trade. I'm doing that for my flagship fund right now. I got a lot of cash in the portfolio. We might get the next risk monitor green yellow signal by the end of the week. So what I'm trying to do is pick off these carry trades. And if we get the ARMR algos positive on the big indexes so that the risk monitor is changing, we're going to be on the trade early. Instead of having to buy at the end of the day, we're going to get long during the day. So you could join me on the trading desk for that. Okay. So that is how we're going to attack the ARMR macro fund. Okay. We may be long during the day, triple the S&P, and then hold it overnight if trade number 27 fires. Okay, that'll be the first shot across the bow. Shot across the bow. Maybe the first, open the engines. This is our trading strategy. Actually, it should be 36 months now, and we're up over 185% trading this strategy. All we do is get long the S&P, triple the S&P, and hold it for a quick swing trade. It didn't fire yesterday. I thought it might. Okay, so we just used our day trading tool and we booked a profit on the day trade. But it's possible this 3-bar reversal will result in trade number 27. And if it does, we'll be holding that for our next advance. Okay. Now let's shift over to 2 highlighted stocks of the day. 2 highlighted stocks of the day I want to talk about. And it dovetails with the leading index in the risk monitor. So we have 10 indexes in the risk monitor: S&P weighted, NASDAQ weighted, S&P equally weighted, NASDAQ equally weighted, the Dow, the small caps, momentum, IBD 50, treasury bonds, and Bitcoin. Those are the 10. There's one index outperforming all the rest, leading the rest. And when you dive into the index, it's fascinating. We're seeing some unbelievable chart pattern breakouts. We already own a couple of these names in the portfolio. I'm going to share with you what they are and what we may be adding in a minute. Let me remind you, this is Wednesday. I share this with all of you on Wednesday, and I like to go over the ARMR Investing Way, a piece of the investing way every Wednesday. And together, we're going to end up building a book. I'm going to share it with you. It'll be an ebook or whatever of step-by-step how to invest following the ARMR Investing Way. And today, we're going to talk about how to identify the 10X investments. There's 3 fundamental pieces of information you need before you put capital to work if you're looking for a 10X idea. I'm going to go over that in a minute. Before I get there, 2 top stocks to watch/buy in the portfolio. The first is going to be IBM. Now, guys, we've been trading IBM around the core going all the way back to here when we first started loading up, and that was 2023. We trade IBM around the core. I talked about this as an ARMR investing way step towards building wealth. You can go find it on the YouTube channel. I have a playlist for you of all of these segments that make up the ARMR investing way. And one of them is called trading around the core. And we've been doing this. This is our, the best example of trading around the core, probably in recent vintage, is IBM. In the numbered slots, 1, 2, 3, and 4, that's where we load up the portfolio with max exposure. And in the letters, that's where we trade out. We book profits on part of the position, trading around the core. So we have a core holding since 2023, and then we load up on the numbers and reduce on the letters, okay? But I want you to know right now, we're loaded up on IBM. Okay, we loaded up down here in number 4, blew out, booked a profit in front of earnings, then loaded up again. And right now, IBM is trading close to an all-time high. It's around 318. It was up around 320 earlier this morning. The reason right now it's popping is that they have a developer conference going on for their quantum developments, and they're making some announcements, and that's juicing the stock. IBM, and actually I shared this with you again on the YouTube channel. Go subscribe. You would have seen a video a while back where I shared with you the number 1 quantum stock to own in the portfolio is IBM. It's not all of the concept stocks that you're reading about. No earnings, no revenue, burning through cash, having to do offerings that dilute shareholders. I don't want to own any of those. I might trade them. I don't want to own them. For an investing portfolio, this is the only quantum stock I need. And it's the biggest position in the portfolio. So I can take a bigger position size in an IBM and experience serious investing success. I don't have to go out on a limb of wild risk in a quantum stock with no earnings, no revenue, no hope for earnings or revenue until 2030. This is the stock to own. So that's the first highlighted stock to own, to buy. We already own it. It's already in our portfolio. We've been on it since 2023. It's a max position for us right now. Here's the second top stock to watch. And I may be buying it in front of earnings. And it's Disney. Now, those of you who know me know that I don't like to buy something right in front of an earnings announcement. I almost never do it. I'll never do it in a small cap, stock that's living on, dreams, right? Because those things, if they miss the number, stock's down 30%, right? So the risk is too great for whatever the reward may be. But I may do it in Disney. They announce earnings tomorrow. This is a turnaround story 5 years in the making. It's been on and off my whiteboard for 5 years. Take a look at the chart. It's my favorite chart pattern for a turnaround story. Long-term downtrend. This is the Fibonacci sequence called the Fibonacci fan. The theory behind it being when you break the third downtrend line, a new trend is beginning, right? And so in this case, the new trend should be an uptrend. Okay, that's what we're looking at. This thing is priced to perfection. This thing is priced to perfection when it comes to, I don't know if price to perfection is the right word. What I mean is it's a perfect setup for me. This is my favorite ARMR setup. Double bottom, right on the 200-day moving average, buy trigger, ARMR algo buy trigger yesterday, earnings tomorrow. I don't know what the number is going to be. This is a reward to risk question. It's possible they screw up the number, stock gaps down, I don't know, 10%. But if the turnaround story is gaining steam, and if you look back here, stock gapped up on earnings because that turnaround story is starting to play. Then it's pulled back. It had an earnings announcement here. It's kind of got quiet. If we get follow through on the turnaround story, that stock's going to fly, I think. Fly for Disney. Let's be honest. It's Disney. So I'm not talking about, a concept stock going up 100%. I'm talking about Disney. So it's a reward to risk point of view. Here's why I really like the idea, and I might be adding. And if I add it, let me be clear, I'll add about a half a position size. Gaps down and it's a disaster. It won't kill me. Gaps up, I can add to the position and make it a big position going into next year. So that's what I'm talking about. Probably adding a half a position size and then reacting to the response to earnings. Okay. Chart pattern, turnaround story, ARMR algo buy trigger. And this is the fourth reason why I would do it. The Dow is taking the lead on all the other indexes. The ARMR algo for the Dow went positive yesterday. The Dow is taking the lead. Something very interesting is happening. Money is flowing into Dow stocks. Let me show you a handful of these names, a couple of which we already own. Okay. Disney, I might be buying. That's in the Dow. IBM's blowing out. That's in the Dow. We're already long Cisco. That's in the Dow. On the top of my list to add, if the risk monitor goes yellow or green, is Amazon after earnings. That's in the Dow. Perfect cup and handle breakout, pennant formation. We're going to own Amazon. Don't forget JP Morgan and Goldman Sachs. I'm not buying these, but these things are breaking out. The financials, big cap financials, that's very bullish for the market. Hey, how about this one? And this dovetails with my discussion about a dividend portfolio I'm going to initiate on Friday. AMGN. When was the last time you thought of AMGN? This is a Dow stock. Look at the chart on AMGN, and it pays almost a 3% yield. That's perfect pattern on AMGN. Look at the pennant breakout. This is a Dow stock. Hey, how about Merck? Merck's at the top of my list. That's a 3.5% yield. Look at Merck. It's breaking out of a perfect bottoming wedge. Hey, those of you who trade with me, ARMR insiders, what does that pattern remind you of? We just had a huge gain in a chart that looked just like this. Remember what it was? Who? You in the back. I see your hand raised. What stock is it? Ready? It's this. It's the same chart pattern as BTU. And we just crushed it in BTU. See that downtrend, bottoming wedge, breakout. We took that stock from 14 and change, right in here, 15 and change, up above 30. We doubled money in BTU off of that pattern. Now go look at Merck again. It's the same pattern. I don't think we're going to double money. We got lucky on BTU because it ended up being part of the rare earth craze, okay? But Merck at a 3.5% yield coming out of that chart pattern, there's a lot going on inside of the Dow. And that's the last piece to the puzzle that makes me think, you know what? Now's the time for Disney. Money's flowing into that space. Hey, don't forget, here's another Dow stock. NVIDIA, they're going to announce earnings this month. Probably the stock's going a lot higher. Okay, so to round out and move on, those are the top stocks to watch in our portfolio, top stocks that we may be buying in the portfolio. The number one index to focus on right now for us is the Dow and stocks that are in the Dow. I will remind you that we've added recently a max position on precious metals. These are our gold and silver positions. I'm just going with ETFs this time. I'm not buying individual names. We're long physical gold max in that green box, physical silver max in the green box. We added SIL yesterday near the lows of the day, and we added GDX last week right on the 50-day moving average. So we have our exposure to precious metals now, and they're looking really good for a markup into the end of the year. So now let me get to the top 3 pieces of information from a fundamental point of view that I need to have when I'm putting capital to work if I'm trying to 10x my investment. Some of my portfolio turnaround stories, dividend stories. I'm not talking about that right now. I'm talking about growth stocks where I can 10x if I get it right. I'm talking about stocks like Palantir. You can go back and look at our YouTube channel. You're going to find me sharing with you back in here, a discussion about Palantir. This is back down in these prices. Actually, it was February of last year. I think this was 2024. Go to my YouTube channel. Go look at February 2024. I did a video for you, and I said, Palantir is a stock that can 10x. I'm paraphrasing for you. And there were basically 3 reasons why. So grab a pen, piece of paper, and write this down. This is the ARMR investing way of fundamental information. There's only 3 pieces of fundamental information I'm looking for when I'm trying to find a 10x investment like Palantir. Moat, management, margins. That's all I need. I want a moat around the business. What does that mean? It means the company's doing something that nobody can do. They've separated themselves from everybody else. Palantir in February of 2024 had a moat around the business. Before everybody fell in love with AI, they were using AI in a way nobody else could do. They have a brilliant management team and a high margin product. This is what happens to companies with a brilliant management team, high margin product, and a moat around the business. I shared this with you in February. Stock was around $20 a share. And you know the story of Palantir. I have to keep scrunching this down so you can see where the stock went, right? Off the screen, 10xer, $20 a share to 200. How do you get a stock to go from 20 to 200? A moat around the business, great management, high margin product. Let's go look at another stock like that. NVIDIA. Think about it. NVIDIA. They've created the hardware to allow for AI. We know this. We know this. I'm not telling you something you don't know. But what I do want to share with you is what are the 3 pieces of information that led to that success. You don't have to get lost in all the other stuff. People are going to tell you all the other stuff you have to pay attention to fundamentally. You don't. You need moat, management, margins. It happened for Palantir. It happened for NVIDIA. And most recently, it's happening for SanDisk. We're long SanDisk this year, August 27th, $47.87. The stock is trading at $271. We're up 460% on that position in a few months. There are very few companies that make the product that they make. There's only 3 really in the world. That's a moat around the business. Smart management and margins are going through the roof. prices are going through the roof. It's a bottleneck for the development of AI. Moat, management, margins, stock price. That's the ARMR investing way. You guys got any questions? I'm happy to answer it for you. See something in there. What do we got here? Levi Yashin, how you doing, man? Nice to see you. That is one of my favorite YouTube followers. You all know who he is. Anyway, guys, listen, I appreciate you spending time with me today. I wish you all the best of success. A couple of thoughts for you on the way out. Join us on X. Make sure you're subscribed. I share information there. Subscribe to our Substack. It's free. It's where we drop information through research reports. This week, I shared with you a sell recommendation. We owned Pure Storage. We sold it and booked a profit. Go to Substack, subscribe, and read why. And of course, if you want to be an ARMR insider or follow the ARMR report, go to armrinvesting.com and see if it's the right fit for you. I wish you all the best of luck. Thank you for spending time with me this morning. Whatever I've said, don't forget, you got to think for yourself. What's your risk tolerance? What are your goals? Execute that and be the smart one.